Good morning and welcome to this yet another edition of the Multimillionaire Forum. This is the June 2026 edition. Every year in June, we try and talk a little bit about India. We are almost getting into a routine now after almost about 3 years of doing this. Before we go any further, here's a disclaimer. I always forget, honestly. So this is an educational and information video. This is again a SEBI requirement, so I just have to repeat it. We are not talking about any product. We're not going to make any recommendations. We are broker distributors, etc. And having said all of that, this is just not in any sort of investment advice. So, make your own decision having had a look at this. Let's move. So, what's happening right now? India, we feel we are kind of left out. In the situation where we see that the whole world has kind of moved forward right from the time I think our government stepped into power from June 2024 till now. It's almost 2 years, and we've not really seen a good, stable time. First itself, the 400 par didn't happen in June 24, and from there, the markets were very volatile. They fell in September 2024 onwards, all the way, rose a little bit, and then 25 began. And as soon as 25 began, you will remember it was tariffs and that kind of chaos was going on. That went, and then we had Operation Sindoor somewhere. So the market continuously was being through one form or the other of turbulence. Earlier this year, now we've seen the tension that happened between the Iran, Israel, and USA war. So there's something or the other continuously happening. But while all this is happening, there's something very interesting that has happened. Okay, Korean market was up 200%. US market itself was up about 25%. South Africa was up 20%. European markets were up 30-40%. So all the world markets were doing something or the other much better. And unfortunately, the Indian market was right at the bottom. We were like last amongst the top 80 markets of the world. We were at about 5% negative. So let's kind of recap as to what's exactly happening in India. Let's figure out what is the state of India. We are going to rely on a lot of things. We've heard about FIIs, we've heard about oil. We are going to also talk about some of the new industries that are developing. We'll talk about everything. So lots to cover and a lot of interesting data that we have and which we will share with you. So what's happening today is it's a major dilemma, right? You don't know, with this conflict happening on one side, because of the blockage in Hormuz. Now, what is happening is very, very distinctly we are seeing a supply chain disruption. As much as day before, when I visited a petrol pump, they said you will only get 49 liters of diesel, and I was pretty shocked when I shared that with another friend from the market. He said that the entire supply chain of for logistics has gone for a toss, because how are they going to manage with 49 liters of diesel? Okay, fortunately, there's no restriction on petrol, but for those who didn't know, all across India, this has just been implemented. Obviously, we've been hearing about restaurants closures, and or if they are running, the prices are much higher. People having to move to their own home cities, people losing jobs. A lot of that is happening. So we are in the midst of a massive logistics crisis, oil crisis, inflation. Our government has sort of managed it well, but otherwise we're in a deep trouble there. Currency has depreciated dramatically, and somehow RBI has kind of pulled it back a little bit, but I don't think they can hold it. FIIs have been sellers. So there are so many factors which are playing in front of us, and we feel that we are being dealt a very, very bad hand in this year of 25 and probably 26 also. But let's see. The way to check all this thing is that if everything is good below the hood, then that's fine, because we have lots and lots of times we've seen these kind of phases that come in our markets as well as global markets. There's always a positive time and there's always this sideways or negative time. Luckily for us, we are not seeing so much of negatives, and you will be amazed to see why. In just a little while, we'll show you all that data. So let's sort of move forward. Let's firstly understand one of the biggest things, right? See, oil. What do we want to talk about in oil? I'm going to summarize first, because there are 4 or 5 different factors that we are going to talk about. So firstly, oil. What is the exact problem of oil? How much oil do we have? How much oil do we need? is the government sort of going overboard by telling us that, don't buy oil, or, reduce your consumption, or this rationing that has just started? It's important for us to understand where we stand. So oil, and then FIIs, and then price inflation, and each of those subjects we will talk about one by one, right? So now let's look at this thing. And simultaneously, my team is going to keep sharing some data. So firstly, oil. Now we are in a situation where we are obviously oil deficit, right? We don't have oil in our country. 85% of oil, we are importing. So we don't have a choice. We barely produce just about 5%. Now, to give you some statistics and numbers, okay? Don't worry about what all you see on the slide, but what I'm going to just show you very nicely is I'm going to circle it so you are able to see everything. Now, this is the place I want you to firstly focus. Okay, so what happens is, this is our oil production, 952,000. We say 950,000 barrels. We produce that much. But how much do we need? Okay, we need about 56 lakh barrels per day. Okay, this is per day calculation. It's not per month, per year. This is our need per day. And which means our daily deficit is 46 lakh barrels is our daily deficit. So which means 85% of whatever oil we have to import. If the oil price is at $100, right now it's a little better at about 90, okay, then what we need is about 465 million US dollars per day. This is our need. Okay, so that translates into about 5,000 odd. 1 million is about, let's say 1 million is to, in today's time, say 10 crores, right? So 465 would mean 4650 crores, or let's sort of round it to 4,500 to 5,000 crores is our daily need of oil. Okay, so let's now having said that, what is our annual bill of oil? We import $189 billion worth of oil. All right. Now, against the $189 billion of oil, okay, what is our reserves? Our reserves is standing at $701 billion. So in that sense, our import, can you see this number 26? Can you make this a little bigger so people can see it? See, I'll tell you why maybe the government has come out with this thing. And why, I mean, if you can just zoom in a little bit and make it a little bigger. Just this table. Yeah, thank you. So can you see this 26? Can you put your cursor there? So I don't want to make a pen mark. Can you put a cursor on this 26.96? Almost 27%, you see, of our reserves today is being spent in oil. It was 20% for the last 2 years. And, it kind of jumped up again, here in 2020. This is 2022, 27%. Can you go left? I can't see the year. Okay. Yeah, FY23. Yeah. So it was 27% there and 27% here, but it is jumped up from 20 to 27%. 7% means it's like, lots of billions of dollars. And that is the reason why. And the thing is, we don't see any sort of respite in this in the near future, which is why probably the government has come around and told us that, don't buy so much of oil, or, try and conserve oil, because we have a certain amount of reserves, and our reserves is likely to, get extinguished pretty soon. Now, this is the reserves. See, this is our oil stock, which is very interesting. We have about so many, 4.9 trillion barrels. Basically, forget about the number. The important number is 36 months. We have oil stock between 24 to 36 months. Now, this was, quite interesting to see, versus when we were seeing data, we were being told that we have 3 months and 4 months. So I think we should be okay with respect to oil, but the fact is our bill is going up. We are not being able to bring in so much of, you see this problem now here. This green column that you see is how much is the inflow yearly basis of dollars. How many dollars are coming in? So it was quite steady, but in the last 2 years, 11.5, and this year it's negative. So imagine we don't have dollars. We are at 8.8 negative. We are having no inflow. Imagine there is no income. We only have our savings, which is this 700, and we are spending about 26% of that. towards oil. Big problem. And of course, this gold also. We spend about 10% of our money because of gold imports, and that's the other reason. See, basically, this year we don't have income. This is what it looks like, for FY26, which is why the government has probably done this thing, and it has told us that we need to stop or avoid buying this thing because the problem is severe, right? I mean, you saw. Just imagine. I want to repeat it so that it sinks in properly. This year, it seems we are not earning any money, but whatever is the money that we have saved from our savings, we are buying oil. So we are actually dipping in our savings. Nobody likes to dip in the savings. And when you're running a country, maybe the problem is that much more compounded. So let's come back to the presentation. Okay. So as you can see, oil creates a huge impact on our forex reserves. Okay. This, of course, we just want to highlight this thing. If we are going to be a 7 trillion economy, which is what the intention is, we will not be able to do it if oil remains at a high price. Yes, the situation, as you have guessed, is not like the best as far as oil is concerned. Right. And what are the direct impacted sectors? Obviously, transportation, manufacturing. The problem is food. When the problem starts converging into food and fertilizer required to manufacture food, when that becomes a problem, then it's a very, very serious thing. Now, we are not able to gather how much food reserves we have, but some point of time we will even get that. We should be okay, but I think it's a good idea to have a little bit of extra. I mean, if you're stocking up 2 months of food grains in your house, maybe do it to 3 months. I mean, that's a small little tip that I could give, but because you don't know how far this is going to go. Okay, let's move further. Now let's look at reserves. Okay, we saw reserves versus oil data. So let's move forward. Now let's come to the subject of FIs selling. Major controversy, right? The whole world seems to be talking that FIs are selling, therefore dollars are going out and therefore our markets are crashing. Now, hear this. FIs in this country have been sellers for the last 10 years. Let me repeat it. FIs have been sellers for the last 10 years. FIs have been continuously selling. Okay. And we'll show you some data. Put it up. We think it is the FIs who are actually controlling the markets. To a certain extent, the answer is right. Yes, they are controlling the markets. But the way this control happens is when the FIs come and when they sell, they are selling with a massive force. That force of selling is so much that the market really starts, shaking and going. But for a minute, I just want you to, don't look at the data, just focus on what I'm saying. If for a minute, let's assume that if these FIIs were there and if we were not investing, you and I were not investing simultaneously, and God help us, the markets would have been in a disastrous form. Please zoom in this table. Can you do a control plus plus so we can just zoom into this center table? Yes, that's the table. Yes, thank you. Okay, we are good. Please focus on this table. Okay, here in front of you. This is the table which shows you how much has the FIIs actually sold. And this is the last 10 years of financial data which we've presented. On the right-hand side, this is basically calendar year, and this is basically financial year. So since we are more used to financial year, let's look at financial year data. So as we can see, in the last year, FY 25-26, can you also bring your cursor here? They sold 3,32,000, 3,33. Hello, what happened? 3,33,000 crores worth of securities. Can you please point there? I mean, put your cursor there. Yeah, whatever. That's the one. The year before that, 4 lakh crores. Can you see in 24-25, just these 2 years, how much have they sold? Insane amount, 4 lakh crores. I mean, talking. But then the good news. So this, by the way, you cannot see the heading. I'll just write it for you. This is FII and this is DII. What is DII? Okay, by the way, for someone who doesn't understand any of this, FII is foreign institutional investor. So all the foreigners who are buying Indian equities. Okay, what are they doing? As you can see, for the last 10 years, the foreign equity net, they have actually taken away so much of money. They have taken 11 lakh crores out of India. Okay. And this is the DII. That's okay. You can just roll it down. I had written the titles just for that. DII means domestic institutional investors. So we are also a part of domestic institutions. How? We are indirectly a part of it because we buy mutual funds, we buy into PMS, we buy into AIFs, we buy all these products which are made by product manufacturers. We buy insurance policies, right? That is, insurance is also an institution. So insurance companies, pension funds, mutual funds, AIFs, PMS, all these players together are known as domestic institutional investors. So then, of course, there is retail investor, which is you and me buying stocks directly into the stock market. Okay, that is also a figure which is counted. But here, this is only basically comparing institution, foreign institution, domestic institution. So just imagine, and I will just clear my diagrams again. So just imagine, this is where the cursor is, right? In 24-25, okay, 4 lakh crores was sold by the foreigners. Okay, I'll once again write here FII, so it's easy to see, and DII. And Indian investors, you and me, and all of us together, we bought 6 lakh crores worth of stock. In the next year, 3,33,000 almost was sold by foreigners, and we bought 849 lakh, 8,49,000 or 849,000 crores, which is humongous figure. Sorry, my bad. 8,49,000 lakh crores. Okay, this is the amount of money. This is how much we've been buying. So these are the kind of numbers that we are seeing. We are basically buying 2x or 3x of what FI is selling. So we generally look at every year, 78,000 sold, we bought 114. 26,000 sold, we bought. And in the COVID year, it was the only year in which the FIs bought about 2 lakh worth of 2 lakh crores worth of securities, and we Indian investors, we sold 1,32,000. And then after that, they've only been selling, maybe profit booking and all of that. But at the end of it, we were supporting. So if they have taken away 11 lakh or 1.1 million, we have actually invested 25 lakh crores. We are the ones who are supporting our own domestic market. So in a way, that's a nice feeling also. But the problem is, you may think that, okay, so we are buying double or triple of what the FI is selling, then why is the market not going up? The reason for that is very, very simple. When, like I said, when they sell with a force, they sell with an intense force. See, when they are selling, they're saying sell at whatever price. Now, what happens is when you sell, and when you sell lakhs and lakhs of shares at whatever price, the market just reacts very adversely, and the price just goes down crashing. So that's basically what happens, and which is what we are seeing. So basically, point is nothing to worry. I'm just taking the cat out of the bag. I'm going to show you financial figures also. But for now, this. Can you take me to the next sheet, please? I just want to show. So if FIs are sold this much, how much are they holding? It's important to know that number also. And okay, these are some other numbers. Just make this a little bigger. Okay, so FIs are holding, and please go left. Yeah, totally, they hold about 69 lakh crores worth of Indian equities, which is about 16% of the market. Indian market capitalization is this thing. Such large numbers, too difficult to pronounce. 419 lakh crores, out of which 69 lakh crores is by the FIs, which is only 16%. Important figure is 16%. So please understand, out of the 100 rupees invested in Indian market, 16 rupees is owned by the FI, 16%. Even within this 16%, they own the large majority of banks, as you can see. 21% of their holdings are in banks, finance, IT, petrol, and automobiles, and telecom. So if I were to add just these fellows together, half the money, half of the FIR money is invested in these sectors: banking, finance, IT, petroleum, automobiles, and telecom. Wow, that's interesting news, right? Even we were a little surprised. So which means if you're too much bothered about the FIs, just avoid these sectors. IT anyways is not, in a serious trouble because of AI happening around the world. Banks, as you have seen, private banking sector is lagging for the last 5-6 years. So maybe FIs are not making money there. That becomes a very interesting angle. But I'll talk about that in a moment. Look at where the FIs have invested their money. Very interesting, okay? Mega companies, they have about only 50 companies in which they've invested. But micro is the company which has got a market capitalization of between 2,000 to 10,000 crore companies. They have 2,111 investments, a significant number. So that's why sometimes, the mid caps and the small caps get hammered very badly because the FIs are invested largely there, and in a small percentage in the banks and etc. But there's another interesting theory about FIs. See, in the US, the interest rate is about 5%, say 5, okay? The depreciation of the rupee is another 4 to 5%. That's the other problem. So, which means that there is just no way for them to be able to really make money because 5% US tax-free returns. So, obviously, for that 5%, depreciation of the rupee, say 4 to 5%, and then taxation in India. So, if the Indian taxation again is, let's say, we add another 2 or 3 rupees to that, in totality, on their dollars, if they make 12% to 13%, they're breaking even. Of course, they made a lot of money, but this is also one of the reasons why they're selling. But then it's really funny because they are the ones who are selling and they are the ones who are obviously not making money. So somebody is selling, but some other FI is not making money. Can we show that dollar-based chart of Nifty 500? You know what I'm talking about. Okay, so that's the last thing I want to show for FIIs before we sort of move forward. Very interesting because we all have a lot of confusion about FIIs and how they are operating and what they are doing. But whenever you are ready, you can just put that figure up. Okay. In the meanwhile, while you're searching it, then you can just continue in the presentation and we'll move forward. We can even show it later on if you don't have it ready. But let's have the presentation. So we spoke about oil, big problem. FIIs, not such a big problem in my mind because the speed at which they are selling, that's the only problem. But other than that, they have not taken out all their money. 70 lakh, 69 lakh crores they've invested, they've taken out about 11. So that's nothing. Okay, now, fine. Okay, hold on. Now you've got this. This is not the picture that I wanted, but okay, no problem. Just hold on. Don't do anything. Okay, okay, friends, have a look at it. This is our Indian market, CNX 500, which is the top 500 companies. That's the best way to look at exactly what the market is doing. And what I'm going to do is I'm going to draw a line here so that you understand what I'm exactly talking about. This point was somewhere in the middle of 2021, September or 20. So look at this level. Okay, this is where the market was. Today, after 5 years, the market is more or less hovering around the same rate. So imagine if an FII invested something around November of 21. This is in US dollars, okay? This is the Indian market in US dollars. So if you were a dollar investor and if you came to India in October, November of 21, and you've started investing from there, in 5 years' time, how much returns have you made? 0%. The reason for that is the market went down, went up, whatever happened. But today, after 5 years, an investor who invested somewhere around 21, 22 is sitting at 0%. This is the FII investor, okay? So obviously, there is also that motivation for the investor, for any investor to get out of a market if they're not going to make money. 5 years, we get frustrated probably 1 or 2 years, right? 5 years, they didn't make money, a lot of them. So that's the other thing which I wanted to show you. In dollar terms, the problem of this interest rate there, 5%, because that is risk-free, and our depreciation and our taxation. So let's hope the government is listening and they do something about it for all of us, not only for the FIs. But let's come back to the presentation. Let's move forward. There's quite a bit to cover. Let's just take a breather. Okay, so we are now going to move into another area which is very interesting because, see, these are the two problems. So A, oil, big issue, big problem. B, from our investing point of view, FI is taking away money. But think about this thing, which China does very well, but we are not doing it so well. These are the things that we need. We need higher exports. We need global business to happen. See, we need the government to talk very interesting things, telling you and me, go open companies there, earn US dollars, bring those dollars. I mean, you can't. See, this is a classic case. What happens is when things become expensive, what are we first going to do? We'll try to save. I mean, cut expenditure. And that's exactly what the government is also doing. Okay, the government is doing what? Things have become expensive. So instead of thinking in a positive mindset, saying let's increase revenue, instead of first let's say, "Ye bachao, let's cut this expenditure." What is you and I going to do? What are we going to do? Let's cut out eating out. let's not go to expensive restaurants. Let's sort of cut down on our travel a little bit. Let's instead of 3 holidays, let's do just 2 holidays or 1 holiday. Okay, we first automatically are programmed to save, cut back, but we don't think in terms of, listen, so if things have become expensive by 20%, how about increasing my income by 20% so that my lifestyle remains the same? So that is the point we're trying to drive at. It's just a point of view, but bring the presentation back. But that's very, very important that the government also starts thinking business, thinking like a capitalist instead of thinking like a socialist. So let's expand foreign businesses. Okay, if our export more cars, export more services. If we are lagging behind somewhere, I mean, it's a problem. We are lagging behind a lot of places, which we'll again show you. But soon you will understand that there's no other option. If so somewhere somebody, and we have a great think tank, right? Somewhere somebody needs to understand that what we need is to increase revenue instead of cutting costs, because there's only to a limit that you can cut costs, because beyond that you can't. So yes, forex matters, but how much can you cut cost? Okay, let's move. So these are some of our views, like I already mentioned. Basically, this is what America does, right? All the American companies, I mean, if you are eating like in Pizza Hut, or if you're drinking Starbucks coffee, or if you're looking at KFC, or if you're looking at Burger King, these are all global companies, Nike, Adidas. I mean, think about it. Think about a consumption. I mean, this most important thing, Apple phones. What is all this? We are all so used to using so many American products, and ultimately the profit, they are making profits, and they're taking profits back to their country. So why don't we think in terms of doing some clever things, manufacturing and exporting services, and repatriating the earnings back to India, create opportunities, give tax breaks, and all of those things, so that things come back. Basically, what we need to do, or what our government needs to do, is get into a proactive, business-oriented mindset, saying, let's bring some dollars into India, whatever happens. Okay, let's move forward. We're going to talk about some specific sectors which we think are very, very important. And these are the sectors which will bring a lot of revenue into India. And by the way, we're not here just sending a message to the government. We are actually, sharing information by which you can make some very smart investment decisions. So each of these areas, India has no option. We are already doing it, but somewhere some babus need to think that, we need to stop walking, we need to start running, we need to start sprinting, we need like blistering pace. If we don't move at that speed, we are going to be, left out, and we'll all the time be thinking about cutting back, saving, and all of that. So India is doing things, but we need faster pace. Each of these sectors is a fabulous opportunity. We'll talk about everyone one by one. Let's go. Okay. One of the biggest things, data centers, fabulously brilliant business. Okay. How many data centers do we have? Do we have the data on the next one? Let's just talk about data. Okay. There you see. Look at America. 4,200 data centers. Where are we? Okay, we are at 296. This is India. Can you just point out to India so that, India, there it is. So, okay, we're not bad. We're not as bad as, we are still in the top 6, 1, 2, 3, 4. Yeah, we're in the top 6. But hey, look at, you need to move forward. China is about 369. Okay, you'll be happy to know, in terms of data centers, in the last, we are moving. In the last 5 years, we have actually doubled. So 5 years back, or, the last time we spoke about data centers, I think a year and a half back, we were somewhere at about 150 odd. So now we have come to 300. But like I said, we need to stop walking, we need to start running. We need to, and India being such a big country, and in the data center presentation, we actually explained that India is one of the largest consumers of data, and because of its population and because of the interest in whatever we are doing. So which is why we are the ones who need the largest amount of data centers. Now we are actually paying so many American companies, because they've got 4,200 almost data centers. So we are actually paying dollars to them. So the government should scratch their heads and say, hey, instead of 300, we should probably look at setting up at least 1,000, maybe 1,500 data centers. We should triple them. And which is why we can save some dollars by not paying them. We can, keep those dollars in India and obviously pay Indian rupees to Indian companies and have data center here. But what that means is, data center is a brilliant opportunity. And please, if you want to have a look at that presentation, do have a look at it. And there was a brilliant piece of information that we got together, and where we explained data center was such a massive opportunity. Okay, the next is semiconductors. Let's look at that. So India has something called a semiconductor mission. Our Honorable Prime Minister did announce that, we want to become Atmanirbhar in semiconductors also. But where are we? Let's look at it. Come, next. Okay. So, okay, that's the market size. We think we are going to reach to about 100 billion, but look at where we are. We are at about 50. Now, we will reach there in 5 years, but that's the market size. By the time we reach there, the demand could be even more. Right now, we are, look at the movement. In the last 3 years or so, we've grown from 38 billion to 50 billion. We need bigger growth rates. We need 20-30% growth rate. But this growth rate, as it is, also provides a great infrastructure opportunity. And not only in data centers, there are a lot of allied fabrication, display, chip designs, as you can see, you know, cooling systems. We've always spoken about cooling systems and cooling industries because the data center, semiconductor to manufacture generates a lot of heat. That heat needs to be cooled down. So that's all these allied industries are a great opportunity moving forward. We cannot stop talking about renewables. See how much it was required. For 5 years, solar being the biggest one, we meaning the Indian government had already announced that we need to go to 500 gigawatts. We are somewhere at about 250, 300. We are moving slow. And you'll be amazed to know, we'll show you some figures as to see where China is. Of course, wind and energy and green hydrogen, all that is happening, but the biggest piece is solar. And we are in the best place. We are at Tropic of Cancer and the equator is just a little below us. We should be the one, manufacturing the largest amount of solar. We should be exporting solar. Forget about oil. We are going to generate our power through solar and let us sell to the world. That should be our thinking and at rampant time, because then we will be saved from this issue of rationing of petrol and diesel and the fact that we have to cut back on all that. But we need to grow here. We'll show you numbers. Come. See, we've highlighted India and China. In the last 10 years, China was at, and this is gigawatts, friends. China was at 541 gigawatts. In 2025, see the intent of the country, 5 times they've grown. Okay, we're not so bad. We've done about 3 times. From 90 gigawatts, we're at about 250. So we are growing. But the need of our country is that we need to grow that much faster. We can't be satisfied with these kind of growth rates. Look at the growth rates here in the middle. Such poor growth rates, right? 118. Can you put your cursor there? In 2018, we were at 118 gigawatts. In one whole year, we could only do 10 more gigawatts. Then just 7 more. Then 12. This was really sad. Okay, somewhere in 23 to 24, we saw a little bit of a 20% jump from 176 to 200. And then from 200, we have again seen a 20% jump. I hope we see 40-50% jumps because we need 500 gigawatts and maybe 800 gigawatts really fast. And if this doesn't happen, then of course, trouble times. But in the meanwhile, friends, again, caveat, even when this gigawatt power of solar moved from 205 to 251, that made a lot of investment profits for the companies that we could invest in, and even in the energy sector, even here. Okay, so even if this 20% sort of a growth rate, 20% growth rate continues, okay, just imagine 20% growth rate every year in this sector means if you are invested in energy and renewable energy, 20% growth rate is anyways pretty much assured for you because that's where the government is growing. So utna to karna padega. We'll probably do much more than that. Let's move. This is another area. So we keep talking about defense capabilities, right? So we are manufacturing and we're doing a great job. You would be happy to see that our order books are still okay. Okay, so remember, India is being sold by the FIs, but as a country, are we doing business or are we doing not business? Are we not doing business? Is activity, commercial activity happening or not happening? The only way to answer this thing is to look at the numbers of these companies, defense companies, government companies. Let's look at some of their order books. That's the only way we can see whether business is happening or not. So if the order book position is great, then you know for a fact there's business happening. Okay, can you show the order books, please? This is the best way to check. There's no other way to figure out whether the economy is doing good or not. Of course, profit to chahiye, but we want to see how many future orders do they have. So, of course, because this being an informative section, there are no company names here. But can you zoom this, please? Can you make this a little bigger? Can you fill up the screen? Yes, please. A little more. Okay, that's good. So now look at some. See, what I want you to focus on is the blue column and the green column. Okay, so what the blue column says is this is the value of the company today, 97,000 crores, and future orders of, look at this, 23,000. I mean, 1/4 of the value of the company is that much more orders they have. So just imagine, okay, what were their sales in the last year? 13,000 crores. 13,000 crores the sales in the last year, 25-26, okay, which is just got over in this month. And they are still sitting at on 24,000 crores of orders, which means over the next 2 or 3 years, this 24,000 will convert into sales, right? Because the order is confirmed. Even if there's a little cancellation or rejection or whatever, look at it. I mean, look at every company. Look at this company, for example. Sales were 5,000 crores and they have orders worth 20,000 crores. 20,000 crores is almost more than half of the value of the company, listed company today. So the way to look at it is 37,000 is the market cap of that company. That is how much the company's shares are worth today, all the shares. 20,000 more orders. I mean, more than 50% is new orders coming in. The new orders get converted into sales. Just imagine what happens. Okay, so even if the companies are doing profit at the rate of 15 or 20%, the kind of growth that will happen in this sector is humongous. Oh, and we are doing a reasonably good job here, but and you and I may not know about it. We may not be reading about it on a daily basis. We are only looking and consuming negative news and adverse information. But look at this. Look at this. 254,000 crores of orders. And what is their sales? 33,000. 33,000 is the sales for last year. Just imagine your salary is 33,000 and you already have future salary commitments of 254,000. Or if you're a business person, 33,000 is your last year's sales and you have guaranteed orders of 254,000 crores. Just imagine. I mean, massive, right? So India is a very strong force to reckon with in terms of defense capability. Look at this guy, 27,000 crores they sold last year, and they're sitting on orders worth 74,000. So which is, it's not bad, right? I mean, the PSU companies, let's look at some PSU companies below. Then you understand where the government is going, correct? I mean, with their policy measures and everything else. So a lot of companies, 2,000 crores. Okay, I'll just open my Smartest 2,000 crores and sitting on order is worth 9,400 crores. I mean, so can you imagine the multiplier? This is a great sector. We have been invested in. We've always been saying public sector, defense. These are places to be invested in, and these are the logic. These are the reasons. And every year in June we show you this, right? We refresh the order book values. So just can you go up, please? Can you go up So this order book is like the current order book. This order book, they've not written. We should write the date here also. This is 31/3/26. So every year we kind of track the order book position and order book positions versus the sales of the last year. So we know exactly where we are moving. Correct? Okay. Now let's very quickly move into, this is the government data. Let's move into corporate data, please. Okay. Let's move into corporate data. Can you open the corporate data and then we'll see the tax position? Okay, because like I said, there are so many numbers to cover. When you're talking about India and the health, I wanted to do my best to clear the confusion that we are in a good country, we are in a good place. Okay, don't worry too much about what's happening, FIs and all that. I mean, yes, it's very frustrating sometimes to see no returns for 1 year and 2 years. Although we've tried our best, and I'm sure your portfolio is doing all right. Don't lose hope. It's very, very good, and it's very, very positive. Okay, corporate data. Okay, now this is a lot of numbers, but and for the paucity of time, what I want to show you here is the fact that these are industries. Okay, so let me first explain what this data means. So if you are talking about, say, capital market, so capital market is an industry. Now there are companies below that capital market. So we have combined all their sales and we have combined all their profits. Okay, and then we are trying to see how are they doing. For example, just taking this capital market as an example. So 5 years back, this is quarters. These are 7-quarter data. I mean, it's important to see quarter on quarter, right? So you have the exact pulse, ki exactly kya ho raha hai, what is happening, right? So with a capital market now, let's capital market, or let's say we'll talk about healthcare, uh, or we can talk about auto. Just auto is a good indicator. Can you just highlight auto? See, because automobile, it's an industry which employs crores of people across. So in the quarters, now can you see the quarterly sales of all the auto companies in India? 3,71,000 rose up to 389 to 412, 412, 400, 426, 487. Is there a dip even once? Not really. Okay, I want you to now focus on this. Can you take them to the spark line? Yes, just click there. Just click there. Okay. What this column tells you, it gives you an indicator of how this entire last 7 quarters has been for this industry. So, I mean, very few industries you're seeing a kind of a little bit of a dip, right? But most of the graphs, can you zoom into this graph only? Let's just look at the graph. Just zoom into this graph. Yeah, nice. Nice. Very nice. So can you see that most of the places, the sales has also been in kind of an upward trajectory. There is no dip downwards. I mean, this is a little bit flat. Let's say flattish. This went a little bit flattish. But other than that, everything has been generally quarter on quarter, it's been rising, which means report card of this country's corporate data is good. Okay, profits. Now see, some places profits have dipped, but they have recovered, like this one. Okay, I will not put a dot here. You may not be able to see it. Dot here. So just this fellow, okay? It went down and kind of came up back. Here also profit is kind of stagnating. This profit is kind of moving up. This is sideways. This is moving up. So tick. This is sideways. This is kind of not so well. This has gone down. This is tick mark. This is doing well. So now can you see there's so many, I'll just tick mark them, okay? Quickly. This, and this. So many industries are moving positive. What does that mean? What that means is companies in this country are doing business. They are doing business, they are having sales, they are making profits. And when they make sales, when they have profits, the next thing they do is they pay tax. So let's look at the GST numbers. Can you please show us the GST numbers? Let's look at GST data. See, GST data again is another beautiful piece of data. It's like the barometer. I keep saying that all the time. And thankfully, we have GST data which is released from time to time, all the time. Can you zoom into this number, please? Can you see? Okay, by the way, this graph is also good enough. Okay, 1 second. GST data moving up all the way. When these spikes are all April spikes. Okay, every year what happens is in March, companies want to do whatever they want to do. They want to book the business. So a little extra business gets booked in March, and as a result of which, every April you see a little bit of a spike in GST data. But look at the trajectory. Have we kind of gone flattened? No. Have we gone down out of the question? Nothing like that has happened. So we have not gone down. We've not been sideways. We are just moving nice and good. I've been here, and every year we are just going higher and higher. Now, whether we like it or not, we pay GST on everything, right? But this is the best way to see the health of the economy. In May of 2026, GST collections was just a little bit under 2 lakh crores. 1,94,000 crores is what we collected. Fantastic. Now, April was 242, March was 200. Now, you may argue from March to May, it's kind of fallen down, but doesn't matter. This is the trend. If you look at the whole trend month on month, last May to this May, so last May was 188, and in this May it was 194. That way, if you look at last April, it was 236, and this April was 242. So we are moving up. Last March 2025 was 196, and this March was 200. So nothing wrong with the tax figure, which means, see, please understand, how will companies pay tax? How will companies pay GST on their sales if the sales are not happening? And if GST is happening, that means sales are happening. If sales are happening, that means profit is happening. Now, obviously, if it's a loss-making company, then it's not going to survive. But obviously, if the sales are happening, there is likelihood of profit growing. If the sales is growing at 10%, 20%, 30%, the profit will also grow in the same fashion because the GST is growing. So see how it's all interlinked? That's the best way. If you don't want to see any other number and if you're worried about it, look at the GST number. GST number is published even in your notification. Okay, that last month's GST number is this. Or you can go to you can just Google it, last month's GST number. It will take you to the Finance Ministry's website or a lot of other websites that keep publishing this GST number. So GST number tells you exactly how the economy is doing. Okay, let's go to the last section. Some of the possibilities. Now, the question here is, what is the government doing? Because we feel everything is bad. Oil crisis, financial crisis, fertilizer crisis, food shortage, everything is shortage. FIs is selling the markets and, rupee depreciating. All these problems, of course, the government knows about it. And hopefully they'll do something about it. And the sooner they do it, better it is. But there are some policy possibilities that we see. Okay. More than possibilities, please, next, sir. This is more like a wish list of sort. This is our view again. So, capital gains, domestic and international, this has to be rationalized and reduced, eliminated, because maybe the government has this kind of response. I don't see them doing it, but I don't see that they have another option also. If they have to do some encouragement, if they have to give some fillip, if, see, the reason capital gains were removed is not to make retail investors like you and me happy. It was to unlock capital flows from abroad. That, billions of dollars would come in if India said, okay, tax free. Now India's make taxation. Uske upar our rupee is depreciating, and we showed you that FIs are not making money. So then, FIs will feel that I'm coming in and I'm paying so much of securities transaction tax and I'm not making any money on that. So why should I invest? Okay, so they take the money out. Anyway, so that's the other area, STT. Now, if the STT was there, why is the need for capital gains? But I hope the government does something to review, rationalize this. For you and I, TCS on international investment, these are not opportunities, but these are policy measures. And each of these policy measures will actually indirectly contribute to some amount of capital flows happening. Okay, so anyway, so there's TCS. Really, from a retail and from a you and me point of view, I don't really know how this is benefiting. To my mind, it's it's not a worthwhile tax thing to do. It just wastes everybody's time. So it's just a major time waster for everybody. It's just compliance and really no benefit to the government or to us. In fact, we have to spend a little more every time we do any international travel or investment or education or anything. Education, thankfully, it's a little lesser, but everything else is 20%, which is pretty painful. Foreign capital, we need to have a more friendly environment, basically encourage people to come here. We should, again, we spoke about it, that we should get tax incentives for opening companies abroad, earning from abroad, and whatever money comes from outside India. See, you and I can do this in a very simple and very easy manner. So if the Korean market is doing well, if the Japanese market is doing well, if US market is doing well, instead of having restrictions and curbs, or you can't go through mutual funds, you can't do this, means you can, but there are limits. So instead of that, encourage people, go open a foreign account, buy shares internationally. Why don't you do that? Okay, and then we will not charge you adverse tax. International shares, if you sell before 2 years, the government wants 30% tax on that, which is painful. So it's very unfriendly, correct? It doesn't make sense. So if that happened, then again, a lot more dollars would come in. And the most important thing is gold. We have almost, like a huge amount of gold reserve, 5,000 billion, 5 trillion almost. That much gold we have in the household. It's just an estimated number. But even if 10% of this gold was unlocked and came into the mainstream system, and if the government came out with some interesting policy saying, okay, don't worry about tax and all, just come, bring your gold to the, declare your gold, bring it into your system, maybe a lot of problems get solved. So there are so many of these things that can happen. Let's see how many actually happen. But my sense is that the government should do something, because we will keep doing all right, over a period of time. Even if government doesn't do anything, or if there's a new government that comes in after whatever, 3 more years, things will be okay. But the pain will be reduced and we'll have to suffer lesser. The government will have to be lesser in stress, because you cannot control geopolitical stress, but at least you can control some amount of economics that is happening and commercial activities happening in the country. So, that's my submission. Long little presentation, but there was a lot of data. And to give the whole picture of India, it was important to bring all these factors in together, so that, there's a great understanding, and at least there's a lot of relief that everything's not bad under the hood. It's all right. Things will improve. Whether it takes 1 month or 6 months, I don't know. But at any point of time, the markets are down, great time to keep making additional investments. Not such a great time to pull out money, but maybe make some more money. But if you're already in the pull out mode, even then that's not bad if you're sitting on old profits. But net, it's not so bad. So with that, we can